Here's a question for you. Is the 2026 FIFA World Cup just a sporting event? No, it's the biggest business machine in the history of sports. FIFA expects the tournament to generate $11 billion in revenue. That's more than the GDP of some countries. And while the world is watching the ball, some people will quietly be making money. From stocks, from advertising, from brands, from infrastructure. Today, I'll show you who those people are, how this machine works, and what lessons we can take from it. Let's start with a simple question. Where does all the money from the World Cup actually come from? Most people think it's ticket sales. And yes, tickets do generate revenue. But tickets account for only about 10% of total income. Just 10%. The real money comes from broadcasting rights. Television networks and streaming platforms around the world pay FIFA billions of dollars simply for the right to show the matches. At the 2022 World Cup in Qatar, broadcasting rights generated more than $4 billion. The second major source of revenue is sponsorship. Companies like Adidas, Coca-Cola, Visa, and Hyundai pay tens or even hundreds of millions of dollars for the right to be official tournament partners. And the third source is merchandise, licensing, food sales, hotels, and airline tickets. This massive flow of money doesn't go only to FIFA. It spreads across thousands of businesses around the world. Now let's talk about the market. What happens to stocks during the World Cup? There are several types of companies that tend to benefit from the tournament, not because of magic, but because their businesses are directly connected to it. The first example is Adidas. The company supplies footballs and uniforms for many national teams. During the World Cup, sales of sportswear and equipment rise significantly around the world. People buy jerseys, boots, sneakers, and souvenirs. The second example is media companies, the companies that own the broadcasting rights. During the tournament, advertising revenue often increases dramatically. The third example is payment companies. Visa has been a FIFA partner for decades. Billions of transactions take place in stadiums, fan zones, and online stores. Every purchase generates a small fee. But here's something important. The market usually reacts long before the first match begins. Professional investors often buy in advance. By the time everyone is talking about an opportunity, much of the growth may already be reflected in the price. The 2026 World Cup will be the first in history to be hosted by 3 countries: the United States, Canada, and Mexico. This is not just a sports event, it's a massive infrastructure project. Cities invest in stadiums, transportation systems, and tourism facilities. Every match attracts thousands of visitors and millions of dollars in additional spending. To understand the scale, let's look at Qatar. The country spent around $220 billion preparing for the 2022 World Cup. New stadiums, roads, metro systems, hotels. Many economists argue that such investments are difficult to recover directly. But Qatar gains something else: global attention, international recognition, and long-term tourism benefits. The United States is in a different position. Much of the infrastructure already exists. Instead of building from scratch, the focus is on upgrades and improvements. That could result in a higher return on investment. Construction companies, hotels, and transportation businesses may also benefit from the tournament. Now let's talk about psychology. This may be the most important part of the story. During major sporting events, people become more emotional. When their team wins, they feel optimistic. When their team loses, they feel disappointed. Research suggests that investor sentiment can even influence stock markets. After victories, local markets sometimes perform slightly better than usual. After defeats, the opposite can happen. Not because the economy changed, but because people's emotions changed. Many individuals make financial decisions based on excitement. They buy assets because of hype. They spend impulsively, or they gamble money that could have been invested for the long term. The difference between a fan and an investor is not how much they love football. The difference is how well they control their emotions. And finally, the most important question: what should the average person do? First, don't chase so-called World Cup stocks after the tournament has already started. In many cases, the market has already priced in the expected benefits. Second, focus on companies that can benefit from the sports industry over the long term. Sports retailers, media businesses, payment networks. These companies don't rely on a single tournament. Third, use the World Cup as a reminder. Money is always moving. Some people spend it. Some people earn it. The question is which side of that movement you want to be on. You don't need to be a millionaire to start investing. You simply need to begin thinking like an investor. The World Cup only happens once every 4 years, but the opportunity to build your financial future exists right now. If you enjoyed this video, make sure to like and subscribe to the channel. Thanks for watching, and I'll see you in the next video.